Today, both the Bank of Canada and the U.S. Federal Reserve are set to release their last overnight interest rate announcements for 2025. Now, the Bank of Canada has already released, as of 10 a.m. Eastern Time, a hold of 2.25%, and the U.S. Federal Reserve is set to release their announcement later today. The U.S. Federal Reserve in the United States is widely expected to lower its key overnight rate, and in Canada, economists and pundits were split between if the Bank of Canada was going to increase or decrease the overnight rate from its October decision of 2.25%. One of the reasons economists and pundits were split on what the Bank of Canada was going to do was based on a stubborn and core inflation rates holding just over the target rate of 2%. Now, meanwhile, job creation and the unemployment rate has fallen down from its high, is now down to 6.5%. Now, the key issue with the job numbers is how much is being created in the public sector and how much jobs are being created in the private sector. We haven't heard exactly or dove deep enough into these numbers to really determine what part of the economy is really creating these jobs. Canada's main investment index, the TSX, was flat ahead of the announcement, but right after the announcement, it did take a sharp uptick when the Bank of Canada made their announcement. But this entire debate reveals a bigger problem. There is a theatrical misdirection going on. Mainstream economists keep asking and focusing on the wrong questions and the wrong issues, while the majority of the population of Canada remains under the thumb of a central bank that doesn't even need to exist. The headlines are distracting the public from what's really going on, and today we're going to dive into some of these issues. So while the news cycle obsesses about what the Bank of Canada is doing, are rates going up 25 basis points? Are they going down by 50 basis points? The theatrical misdirection is happening. The truth is this: the real problem isn't the rate. The real news isn't the rate. The real news is the structure, and the real news is the why behind the what. The questions Canadians should be asking are much more fundamental than what's in the headlines. And the first question that we should be asking ourselves is, why is only a handful of people in charge of the price of money? Let's start with the proper frame to this question. Why is the price of money one of the most important factors and costs in an economy and for economic decisions being controlled by a committee who only represents a fraction of the population? And this is exactly the problem that author F.A. Hayek talked about in his book, The Road to Serfdom. And that is the idea of a central authority operating from an ivory tower. How could they possibly possess enough information to coordinate the market, the free market, the market of people making millions of decisions every day? How can they possibly have enough information to coordinate a right decision? The overnight rate is not just a policy tool, it's centralized command, giving mixed signals to families and individuals and investors who want to perhaps invest, whether they save or borrow, whether companies shut down their operations or whether they expand their operations. In a true market economy, rates and the price of money is generated from the voluntary, non-coercive actions of people in the marketplace, not done through a centralized committee with fiat monetary policy. Yet we allow this most critical price in the market, the price of money, to be controlled by a tiny committee far removed from the decisions of everyday Canadians. This is not capitalism. This isn't even a mixed economy. This is socialized central planning done under the wrapper of nicer branding. The second question that Canadians should be asking is, why is the Bank of Canada complicit in the profits of commercial banks? Let's be honest, the commercial banks are making money hand over fist, regardless if the rates are going up or down. So how does the decisions, monetary policy, the decisions of the Bank of Canada on the price of money help the banks make money in every economic environment? Well, let's dig into this. When the Bank of Canada lowers the overnight rate, essentially what they're doing is they're increasing the reserves held at the commercial banks through newly printed money. They're buying assets in the economy with money created at the just a keystroke. Now, the way that commercial banks lend in order to stimulate the economy through credit is they are able to lend against these new reserves. So the increased volume of credit allowed, even if it's at a lower price, increases the higher interest volume earned. The higher the interest earned, the higher the profits of the banks. Now, when the Bank of Canada increases rate, they're extinguishing part of those reserves. But that new money in the earlier part of the business cycle still exists. That new credit hasn't been called. Variable rate loans increase in rate, but meanwhile, they're not adjusting the long-term or demand accounts, the interest rate that's paid to those depositors. And when you have an increase in lending rates and a static deposit rate, you're increasing the spread on the amount of reserves that you have on your balance sheet. So although the banks may be lending less, they're lending at a higher profit margin, which again is going to increase bank profits. The result is that the commercial banks in Canada are going to win no matter what. They are at the central part of the game, and the Bank of Canada is complicit in helping them create more profits. And let's be honest, this is one of the least talked about commercial activities in the country. The third and final question really should be not what the headlines are saying. It shouldn't be what the Bank of Canada does or doesn't do with the overnight rates. The question is, how should we react? Whether interest rates go up or down, the question we should be asking ourselves is, how do we position our next decisions based on what the Bank of Canada is doing? The most powerful key is in our response to the Bank of Canada announcement, not what the Bank of Canada announcement is. For example, we may need to adjust our reliance on variable rate debts. We need to realign our capital. We need to mitigate risk in our personal and corporate finances. We should be thinking about repositioning our assets in a monetary policy that is either tightening or easing. And no matter what the central bank, the Bank of Canada announcement, or the media is saying, we need to position ourselves with enough knowledge about economics that we can properly adjust our sails. In other words, stop playing defense on the Bank of Canada announcements and start playing strategy. Because guess what? The Bank of Canada is going to do what it does. Our job is to create a financial system and architecture that is resilient no matter what the market is doing, and hopefully create profit and grow our capital along the way. So with all the news about what the Bank of Canada is doing today, don't get caught up in the headlines. Start thinking proactively. Because as I said before, the real story isn't in the rate, it's not in the theatrics. The real story is in the structure and the why things happen. And it's how you position your strategy in a world where the price of money is determined by a central committee, not voluntarily in the marketplace. So if you want more commentary on politics, history, economics, philosophy, and financial literacy, make sure that you stay tuned to this channel. Like, subscribe, and share my content, and hopefully you'll discover more about Austrian economics and how you can create strategies to prosper and thrive. Because tomorrow's economy doesn't belong to people who wait. It belongs to people who prepare.